Everybody, welcome to the next episode of our series. So today we're going to be talking about risk management, and we went over discipline. We went over a couple of different topics for you guys already, and I think risk management is going to be very important because
Mm.
these are the type of things that you kind of learn on your own. And we're going to talk about the three main things, which is emotions, over risk, and over trade. This is what every trader goes through, and some people still go through it even though they've been in the market for so long, right? Hitting that break-even point, never being able to consistently be profitable. So we're going to go over that and pretty much the tips and tricks that we use now that we wish that we knew when we were beginners. So starting off with emotions first, I'm going to let you answer this, Stefano. So how did you overcome using emotions in your trading? And do you still use emotions in your trading?
I think I covered this in either the first video or the second video with not my partner, but a friend of mine that we kind of came up into the industry together.
Right.
He was very emotional, and I learned, you can't be emotional, you can't be undisciplined. Sitting back, it's almost like a big brother and a little brother, where you could watch the big brothers or big sisters faults and mistakes that they grow up doing, or what they get away with their parents with and what they don't, or how they do in school, how they do in sports. You just watch that. Now, we didn't have a big brother little brother dynamic, but it was more of like I got to watch that like as a friend, and I would give him guidance like, you got to calm down a little bit and not get so riled up by the markets, because they're just going to beat you down, which they ended up doing. That was his fate. And that's a lesson for all you guys. I know you guys can't see that right now, and you guys weren't able to watch that, but just take it from me, take it from any successful trader, Sharma as well. That when you're showing emotion and you let the market get to you, it's just it doesn't go well. And I think
Absolutely.
a really good tactic that someone could do is if somebody like reaches out to you on social media, or you get some kind of hate somewhere, a lot of people let that get to you,
Yeah.
where in reality you just got to be like, all right, try me, let's see if this actually gets to me, let's see if this gets under my skin, say what you want, laugh at it, right? You could do the same thing with losing trades. It's like, try me. I just took a losing trade, managed risk, did everything I was supposed to. Let's see if that actually gets under my skin, and it doesn't.
Right.
Now, if you mess up in a big way, then it's a different kind of loss. But there's good losses and bad losses that you got to learn to manage those emotions with.
What do you think is the hardest part for a lot of the beginner traders, or maybe like even when you were watching your friend, what do you think was the hardest part for him to like overcome emotion, letting emotions dictate his trades or like, anyone's trades? What's the hardest part?
I don't know if there's like a hardest part. I just think it's like how people are naturally, like their personality. And some people let things get to them in their personal lives, or in business, or in school, or sports. There's many, I mean, trading lines up with just about everything, but just you got to learn to manage those emotions in everything. And once you do, that's why it's the same thing with discipline. Using discipline in your personal life, it's going to help with your trading. If you're
Mhm.
able to stay cool, calm, and collected in your personal life, you'll be able to do it in the market.
Yeah,
It just takes time and practice. You don't just do it right away. You just gotta get used to that.
right. And I think for me personally, like the hardest part that I've seen other people like struggling with when it comes to emotions and like risk management is this entire cycle of emotions that you see. So I think I've mentioned it before once, but there's pretty much any emotion that you can think of would fall under these five categories. The first one, it starts off with you're excited about the market, and then you see, like, for example, NFP today was a perfect example, right? So everyone's excited about NFP, and you know that it's going to come the first Friday of every month. So now you start thinking, like, okay, I want to be part of that, like 50, 60 pip move that happens with every NFP, right? Especially with gold. So you come in with this excitement, but you also come in with this sort of greed that you want to make that money. And then after that, let's say you get a huge hit, or you didn't manage your risk properly, you're like, okay, I have my entire analysis down, I know it's going to go my way, but you know what, it ends up going the other way. And so then you start going into, once you start being super greedy and you start taking like one or two losses, three losses, you start getting into this fear, right? This market fear of like, I don't know if I want to take this next trade. I know my analysis is on point, I know it works out, but last time I took the same exact setup, it came back, took me out at break even, hit my stop loss, and then went my way. So you go into this fear of, I don't know, like if I should be executing, right? And then once you start actually executing and you're like, okay, let me try this out, even if it's with like low risk, then you start getting into this revenge trade because you're like, okay, I've lost all this money. I need to make that money back. In
Hmm.
reality, the market's already taken the money. It's already, moved it around, whatever it is. You're never making your money back,
Hmm.
right? And that's the hardest part, I think, for people to kind of overcome. And that's why they let the emotions dictate their trades. And then after that, it gets into like revenge trading. You start like seeing a little bit of profits, and then you're like, okay, yeah, I'm excited again, right? And then you get back into this little cycle of excitement. You get into fear, you get into revenge, and then you get into excitement again, and then you have this pride, which then turns into greed. So no matter what emotions you're feeling, I think at any given point in any like whatever experience that you've had as a trader, your emotions and your risk management will fall into that. And I think that's the hardest part, getting over that revenge trading and also breaking out of the cycle. Like, how do you break out of that cycle then?
The reason why we're laughing at that or smiling at that is because we've both been through it.
Yeah.
Every trader's been through those emotions, and it's just kind of funny to look back at. Sometimes we still go through it, but not to the extent. I think with my trading, I've always been pretty disciplined. I think that's been a stronghold in my trading, but it's only because I was able to watch and see what happens when you're not disciplined. Um,
For you, you were able to look at someone with you like almost every day, and you're like, okay, I see what this guy's doing. I don't want to be doing the same thing, right? But a lot of people, they don't have that. And so even when, for example, right now you're seeing a lot of traders come onto YouTube and live trade with people, right? You
yeah.
have that little community in a sense where you get to see people actually going through these cycles right in front of you, right? A lot of people, the ones that are successful,
Mhm.
and I'm not going to name like anyone here, but the ones that are successful, they don't let emotions dictate. They'll do their analysis and they're like, either if it goes this way, then I'm taking this trade, or if it breaks below this level, then I'm taking the trade. But you're gonna see so many people who let actually emotions dictate their trade. And I think that comes down to like the next topic after emotions, going right into over risking. So a question for you again is, how long did it take for you to stop over risking, if you did? And like, what were some tricks or tips that you've learned now that you wish that you knew as a beginner?
So one thing I never went through was the whole over risking thing, but I think I'm still going through a phase where I am trying to up my risk,
Hmm.
and the difficulty with that was the trades that you normally risk less on, or
Yeah.
the trades you're now risking more on, and that's not really truly how it should be. But in the sense, it really is like you're trying to up your risk, up your lot size. You've been doing this much longer than I have, so what it's like doing that. And even on these trades that you're risking less on, you're going to be risking more on, and it's an uncomfortable feeling. So that's just something that you got to get used to. But when it comes to over risking, it's the number one way to lead you to quitting, and
Yeah.
that's the only way you're going to fail at this.
Yeah.
If you're over risking, all of a sudden you're going to be down 15, 17, 20% at the end of the week, and you don't even know what happened. You feel like you just got slapped in the face. It's not a good feeling whatsoever. So obviously just don't go through it. You know what to do. You can't over risk. You can't overtrade. So why do it? Just it's a long process. When it comes to looking at your day needs to be structured, and your day needs to be like, I need to get things done now. But in
Right.
the grand scheme of things, as a trading career, you need to be looking in the long term of being patient with some of these entries and your setups, waiting for your setups. The pays and the waits. So you just want to that was weird. You just want to make sure that you're waiting for every setup that you want, and all the perfect setups, the setups that 80 to 90% are, you're pretty sure that those are gonna play out. And if you're
Right.
not, just live back test it.
It's funny you mentioned like the drawdown at the end of the week where you have 20-25% drawdown for a lot of people. It's funny because when I talk to people and they're like, okay, like what's the equity percentage that you make at the end of the week? And I'm like, oh, a lot of my trades, they go up to like 25%, 30%. Like minimum, if you look at my trading plan, it legit says 5% per trade. So at the end of the week, I have 25%. And a lot of people are taken back by that. And I'm like, well, if you think about it, if you're okay with, and you're still trading, matter of fact, not even okay, if you're still trading with a 25% equity loss at the end of the week, why is it so hard to have a 25% equity increase by the end of the week,
Mm.
right? You just break it down to each single day and each single trade, like how much do you need to make? So it's not
Yep.
very hard. I mean, you look for, even if you're looking for 10, 15 pips, it comes down to like how much are you risking. For me personally, from when I started trading until now, I've never risked more than 3% of my account on any trade. And it went from, I started off with $100 account, right? And so I started risking like between 1 to 3% on any given trade, whether that was a scalp, a day trade, a swing trade, whatever it was. It was always between that 1 to 3%. And the reason why is because there's literally a document out. It's by the Federal Reserve. It's called Overview of Risk Management. But they outline all these strategies for CEOs and senior executives for hedge funds or other major financial institutions. All I did was read that entire document and translated that onto the retail side. What does that mean for me as a retail trader? And that's where I got the 1 to 3%. And now, again, it's the thought process of, and I emphasize this a lot with, whoever I'm talking to, is institutional traders. You watch any podcast, you read any interview, whatever it is, they all say the same thing, that they all need to just make 1% equity increase by the end of the day and they're done,
Mm.
right? Our account obviously is not as big as theirs, but if you can, get that one part of your trading down, of like, all I need to do is 1% equity increase by the end of the day, you're probably just, and let's say even if you have like scale-ins or anything like that, so that will be like 2% equity increase, let's say both of them go your way, you times that by 5 with 5 trading days, right? You have like a 10% equity increase, very easy. And then also, like, even if you have losses or anything like that, but after that point, that's where you start scaling in a little bit more, where it's like, can I, first of all, with your first entry on every single day, maybe you only go with 1% equity increase. So by the end of the week, you have a 5% equity increase guaranteed, right? And then you go in with, okay, now instead of looking for a scale in, maybe I'll start off with a 2% equity increase. So every day you go in with a 2% equity increase. And then by the end of the week, again, you have a higher equity increase. And then you start thinking into, okay, now that I have this static risk that a lot of people like to call, which is a set amount of risk that you go in with. So instead of doing a static risk, how about I break that down into 2 trades, right? So you have that 1% equity increase with the trade that you take, and then you start looking into how can I scale in. And then from there, that's pretty much what I do even right now. So between that 1 to 3%, 1% is for trades that are, maybe it's volatile. We know that there's, from a fundamental perspective, it's pretty shaky. We don't have enough confirmations yet to align with the technical. So all of that, where I'm not like 100% confident in the trades, I'm going in with 1% risk.
It's like
I
a
go in
higher
with,
risk, high reward kind of thing. Not
right.
as far as like the risk what you're putting on, but like the trade. You're trying to get in a little bit earlier than you normally would. Is that what you're saying? Or
Not
it's just like
earlier,
a setup, like it's just a very volatile market.
like a volatile market, right?
Okay.
Where you don't have the fundamentals supporting the technical side. But from a technical side, let's say you do your entire analysis and you're like, okay, I got my little break and retest here, or whatever strategy that you use, but the news isn't there to support that move. Maybe there just isn't much news that day. So in those kind of situations where I'm getting the confirmations from the technical side, but not from the fundamental side, I go in with the 1% risk. And that's what I did like around Brexit time too, because there was so much uncertainty in terms of news. But from the
So
technical side,
volatile.
we had everything setting up. So it was a 1% risk. And then when post Brexit, when things started to calm down a little bit, it was like, okay, well, in February, I started increasing it to 2%. Like we just got out of this little phase. We just got, done with Brexit. Everything's like finalized. But now let's see like how are the markets going to react to this? Obviously, it's a huge news. There's going to be a lot of different sectors of the economy that are going to be impacted by it. So we need to give them enough time to react to it. So 2% risk. And then you slowly start getting into 3%. But even then, it's like, okay, I got my 3% risk going in. You scale out after, let's say, 1 to 1 or 2 to 1 or whatever it is. And then you go in with another 1%. So at any given trade, I don't exceed the 3% at all. So I went from 3% of the account to 3% of the previous day's profits. And
Mm.
that's how you start growing your account.
Compounding, yeah.
Yeah.
Guys, rewind this and watch that a couple more times. I promise that's gonna do you a lot of good. Now you shoot for like 1% per day, like you strive to aim for 1% a day. You ever flip that and say, I have 1% to risk for this day? Like I can't go over like 2%. I can't go over 3%. It's like you kind of reverse that. Or like for the week, I can't go over 5% drawdown for the week, and then I'm done. Like if you get minus 5% drawdown for the week on a Wednesday, you're done for the week. You ever try that?
So I haven't tried the one where it's like, okay, I'm done with the week if I get this drawdown, but I've definitely been in the spot when I said like earlier when I was saying like, okay, Brexit 1%, after that it's go up to 2%, 3%. Then in those Brexit days, it was like I'm not risking more than 1% on any given day, whether that's
Mhm.
New York session, Asian session, London session, whatever it is. That one day it's only 1% risk. And that forced me mentally as well. And it goes right into our next topic of over trading. And I guess like bringing it all together is that when you put yourself under that limit, of okay, I'm only going to do 1% this day, or I'm only going to do 2% that day, it forces you to focus on trades with the lowest risk, right? Where you get your highest confirmation, you wait for your confirmations, you wait for your confluence across time frames, and you know that okay, if I take this trade, there's like let's say a 90% chance that's going to go my way. Obviously, you would still keep that 5%. Let's say some news comes out, wakes you out, or whatever it is, but it makes you focus on your risk a lot,
Yeah.
right? Where can I take the entry and have the minimal risk? So you still have to have a stop loss. The way that I think about it whenever I approach my trades is if I were to take this trade right now, and let's say I don't place a stop loss, would it still go my way? Right? For a lot of people, that's a really hard concept to grasp, but obviously I still keep my stop loss. Everyone should be keeping their stop loss to protect their accounts.
Mhm.
But the thought process should be, well, I have this stop loss as a safety net, just in case there's some news that comes out, just in case, I get wicked out or whatever. It's just a safety net. But if I were to take this trade, I need to have that 100% confidence of, okay, it's going to go my way. That's another reason why if price goes the other way and let's say 50% of my stop loss, I don't close out 50% of my trade. That's another reason why, because at that point, I'm not 100% confident in my trade,
Yeah,
right?
no, we went over that in the backtesting session.
Yeah. And so that's another way that I stop myself from over trading. So having the trading plan, and in my trading plan, I've legit put down that okay, I'm not 5% is the minimum that I need to make per day. So that 1% equity increase I'm talking about, even for an institutional side, if you make 2% as a retail trader, just looking at equity percentages, you've already beat the institutional trader,
Yeah.
right? And this is just going to get harder as you start to grow your account. If you can't build a foundation on this as a beginner with $100 account, you're going to be successful with a $100,000 account or $1 million account, right?
I love listening to other traders strategies when it comes to risk management, how they actually trade. I
Mhm.
listen to a ton of podcasts like the Trading Nut.
Yeah.
This is almost turning into a podcast, right?
Yeah.
But I love listening to other people's strategies because there's thousands out there, and I love that. That sounds amazing.
To
Be
finish it off, we're coming close to the end of the episode. Is there like one little quick tip or trick that you would give to anyone who's watching this part one?
just again, it comes right down to discipline. I can't stress that enough. Like it it needs to be the center of your life, and you need structure in your life. And if you don't have it, you're not going to be good at trading. This is the
Yeah.
hardest market in the world. And if you don't have any kind of structure in your life, you're not going to have any structure in the market because you're going to be all over the place. You're going to be fumbling everything. You're going to be taking random trades, not sticking to a plan. And when I say discipline, it's sticking to that plan. Most people deviate from that plan within a day or two,
Hmm.
sadly. And then they wonder why they're not, doing pretty well. And then, they end up quitting. So get that discipline in order. And that comes to risk management, putting the work in, doing everything you got to do every day. But like I said, discipline is number one.
Absolutely. And then I would say just stay between that 1 to 3% risk, no
Yeah.
matter what you have. But
Cool,
on
cool.
that note, this is the conclusion of part one for this episode. We'll have a part two, and then see you guys next week.
Awesome.